Based on the historical data and forecast, Bitcoin has shown significant volatility. The price has fluctuated between a support level of $85,200 and a resistance level of $108,400. The RSI indicates that the asset has been oversold recently, with readings below 40.0. The Bollinger Band suggests that the price is currently near the lower band, indicating a potential bounce. Considering these factors, I recommend a long position strategy. We will enter a long position at $101,300, placing a stop-loss order at $98,000 to limit potential losses. The target price for this trade will be $110,500, aiming to capitalize on the anticipated rebound and potential move towards the resistance level. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches $105,000 and the RSI crosses above 50.0, we will move the stop-loss to $103,200. If the price continues to rise and touches $110,500, and the RSI approaches 70.0, we will consider taking partial profits at $108,400 while maintaining a portion of the position with a revised stop-loss at $107,000. This adaptive approach aims to maximize profits while managing risk effectively, adjusting to changing market conditions and leveraging both momentum and volatility indicators. Based on the historical data and forecast, Ethereum has been in a downtrend, with a recent sharp decline and continued downward forecast. The RSI consistently indicates oversold conditions, particularly on November 6, 2025, at 32.6, suggesting a potential bounce. However, the forecast for the next week projects further decline. Considering these factors, a contrarian strategy focusing on short-term bounces while managing downside risk is advisable. I recommend a strategy that involves entering long positions when the RSI reaches an oversold level below 30, with a stop-loss placed just below the support level of $3,280. The initial target price should be the center of the Bollinger Bands, aiming for a quick profit on a potential rebound. Specifically, on November 13, 2025, with a forecast price of $2,930 and an RSI potentially nearing oversold territory, I suggest entering a long position at $2,950. Place a stop-loss at $3,280 to protect against further downside. The initial target price should be $3,340, corresponding to the center of the Bollinger Bands. If the price reaches this target, consider a trailing stop-loss to capture additional gains if the upward momentum continues. This strategy combines RSI-based entry, Bollinger Bands-based target, and support level-based stop-loss for a balanced approach in this volatile market. Based on the historical data and forecast, XRP has been exhibiting a downtrend, particularly evident in the recent forecast prices. The RSI consistently hovering below 50, with dips below 40, suggests a bearish sentiment. The Bollinger Bands also indicate a contraction, potentially signaling a period of increased volatility. Given this analysis, I recommend a short position strategy. Entry price should be $2.22, placing the stop-loss at $2.3 above the support level to safeguard against a potential false breakout. The initial target price is $2.09, aligning with the lower end of the forecast range and the lower Bollinger Band. To optimize returns, I suggest a layered approach. After reaching the initial target of $2.09, we will move the stop-loss to break even. Subsequently, we will set a secondary target price of $2.03 based on the forecast. This strategy combines the RSI's oversold signals, the Bollinger Band's volatility indication, and the support/resistance levels to maximize profit while minimizing risk. The overall portfolio will be 60% short XRP, 30% in cash, and 10% in a stable coin like USDC to mitigate risk. Based on the historical data and forecast, BNB is currently in a downtrend, with a clear support level at $936 and a recent dip below the lower Bollinger Band. The RSI consistently hovers below 50, indicating bearish momentum, with recent readings dipping into oversold territory around 32.6. The forecast for the next week projects further declines, reaching a low of $872. Therefore, I recommend a short selling strategy. Entry price will be $950, with a stop loss set at $971 to protect against a potential rebound. The initial target price is $895, capitalizing on the projected downtrend. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the price retraces to the $936 support level, we can enter a short position with an entry price of $930. The stop loss will be set slightly above the upper Bollinger Band at $958. The first target price is $887, aligning with the forecast. If the price continues to decline, we can adjust the target price to $872. This layered approach allows us to manage risk and maximize potential returns in a volatile market. Based on the historical data and forecast, Solana has been in a downtrend recently. The price has consistently traded below the center of the Bollinger Bands, indicating a bearish momentum. The RSI consistently below 50 confirms the downtrend, with values nearing oversold territory. Considering the forecast for the next week predicts a continued decline, a short selling strategy is warranted. We will implement a strategy based on the RSI, with an entry price of $155 when the RSI falls below 30. The stop loss will be set at $159 to protect against a potential short-term reversal, and the initial target price will be $141, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks below the lower band, it strengthens the bearish signal, providing an additional confirmation for our short position. We will enter a short position at $155, place a stop loss at $159, and set a target price of $135, aligning with the forecast. This approach combines the RSI's oversold indication with the Bollinger Band's bearish signal, maximizing potential returns while managing risk effectively. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, TRON shows a downtrend, consistently testing the support price of $0.281. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential breakout. Given the forecast predicting further decline to $0.272, a short position is warranted. I recommend entering a short position at $0.284. Place a stop-loss order at $0.289, just above the recent high, to limit potential losses if the price unexpectedly reverses. Set a target price at $0.275, aligning with the forecast and providing a reasonable profit margin. To optimize the portfolio, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. Initially, enter a short position at $0.284. If the price approaches the $0.281 support and the RSI dips below 30, consider adding to the position to capitalize on oversold conditions. Conversely, if the price touches the upper Bollinger Band and the RSI exceeds 60, partially close the position to secure profits and reduce risk. The primary target remains $0.275, but adjust it based on subsequent price movements and technical indicators. This dynamic approach aims to maximize returns while effectively managing risk. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with increasing volatility. The RSI consistently hovers below 50, indicating a bearish sentiment, and has recently dipped into oversold territory below 30, suggesting potential for a short-term bounce. The Bollinger Bands are widening, confirming this increased volatility, with the price frequently touching the lower band. Given the forecast prices continue to decline, a short selling strategy appears most suitable. I recommend a short position entry at $0.162, placing a stop-loss order at $0.167 to limit potential losses if the price unexpectedly reverses. A target price of $0.143 is set based on the forecast data and the lower Bollinger Band, aiming for a significant profit while managing risk. To refine the strategy, I will incorporate RSI signals. When the RSI falls below 20, indicating an oversold condition, we initiate a short position at $0.162. If the price rises above $0.167, we exit the position to prevent further losses. Conversely, if the RSI reaches 80, indicating an overbought condition, we close the short position. The Bollinger Bands will be used to confirm the trend. If the price touches the lower band, it reinforces the short position. This combined approach, integrating RSI and Bollinger Bands, offers a robust and adaptive strategy for Dogecoin, maximizing potential returns while mitigating risk. Based on the historical data and forecast, Cardano demonstrates a clear downtrend. The price has consistently approached the support level of $0.52 and has failed to break through the resistance of $0.601. The RSI consistently indicates oversold conditions, fluctuating between 27.5 and 45.9, which suggests a potential for a short-term bounce. The Bollinger Bands show that the price is currently near the lower band, further reinforcing the possibility of a short-term rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. My proposed strategy involves a long position at $0.473, coinciding with the forecast price and the lower Bollinger Band. A stop loss should be placed at $0.459, just below the forecast price for the next day, to limit potential losses. The target price is set at $0.5, aligning with the forecast price for November 10, 2025. This strategy leverages the oversold RSI and the proximity to the lower Bollinger Band to capitalize on a potential short-term price correction. This is a high-risk, high-reward strategy, suitable for traders with a tolerance for volatility and a focus on short-term gains. Based on the historical data and forecast, Wrapped Beacon ETH has been in a downtrend, with a recent sharp decline and a forecast indicating continued downward pressure. The RSI consistently below 50, particularly dropping to 29.4 on November 6, suggests oversold conditions. However, the forecast for the next week predicts further declines, reaching 3170. The Bollinger Bands show a contraction, indicating increasing volatility. Given this confluence of factors, I recommend a short-selling strategy. Enter short at 3650, placing a stop loss at 3770 to protect against a potential rebound. The initial target price is 3,500, aligning with the forecast low. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the price breaks below the lower Bollinger Band, confirming the downtrend, we can tighten our stop loss to 3610. If the RSI remains below 30, reinforcing the oversold condition, we can consider a second target price of 3,260. This tiered approach allows us to capitalize on the downward momentum while managing risk effectively. This portfolio combines the forecast-driven short strategy with RSI and Bollinger Band confirmations for enhanced precision and risk management. Based on the historical data and forecast, Chainlink exhibits a clear downtrend. The price has consistently approached the support level of $14.7 and has failed to break through the resistance at $16.8. The forecast for the next week projects a continued decline, with prices falling to $12.7. The RSI consistently hovers below 50, indicating weakening momentum, and has recently entered oversold territory, particularly on November 6, 2025, at 33.9. The Bollinger Bands are contracting, suggesting decreasing volatility and a potential trend continuation. Therefore, I recommend a short-selling strategy. Entry price should be $14.7, with a stop loss placed slightly above the recent high of $16.8, at $17. The initial target price is $13.3 based on the forecast data. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. When the RSI falls below 35, indicating an oversold condition, we will enter a short position at $14.7. The stop loss will be set at $16.5, just above the upper Bollinger Band. The first target price will be $13.3, aligning with the forecast. If the price retraces to the middle Bollinger Band, around $14, we will consider a second entry point for a short position with a stop loss at $14.5 and a target price at $12.7. This layered approach will help maximize potential profits while mitigating risks in this declining market. Based on the historical data and forecast, Aptos shows a declining trend. The RSI consistently remains below 50, indicating a weakening momentum. The forecast data further reinforces this downward trajectory, predicting a continuous decline in price. Considering the support price of $2.56 and the RSI reaching oversold levels below 30, a short selling strategy is recommended. We will initiate a short position at $2.67, setting a stop loss at $2.74 to protect against unexpected upward movements. The initial target price is $2.33, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests further downside potential. If the price touches the bottom of the Bollinger Band at $2.21, we will adjust the target price to $2.21. This combined RSI and Bollinger Band approach provides a robust framework for managing risk and maximizing potential returns in this declining market. The final portfolio will be a short position with an entry price of $2.67, a stop loss at $2.74, and a target price of $2.21. Based on the historical data and forecast, Bittensor shows a volatile trend with periods of both upward and downward momentum. The RSI fluctuating between 45.5 and 67.9 indicates that the asset has been moving between oversold and overbought conditions. The forecast for the next week suggests a potential downtrend, starting from $417 and decreasing to $359. Considering the support price of $383 and the RSI nearing the oversold level, I recommend a contrarian buying strategy. We will enter a long position at $380, placing a stop-loss order at $376, just below the center of the Bollinger Bands, to limit potential losses. The initial target price will be $414, aiming to capture a quick profit from the anticipated bounce. To maximize returns and manage risk, I propose a layered approach. If the price reaches $414, we will move the stop-loss to the entry price of $380, securing a risk-free profit. Furthermore, if the price continues to rise, we will set a secondary target price at $440. This strategy combines the momentum of the recent upward trend with the potential for a rebound from the support level, while the RSI and Bollinger Bands provide additional confirmation for entry and exit points. This portfolio is designed to capitalize on short-term price fluctuations and minimize potential losses through strategic stop-loss placements. Based on the historical data and forecast, Vaulta shows a downtrend with significant volatility. The RSI consistently remains below 50, often dipping into oversold territory below 30, suggesting the asset is undervalued. The Bollinger Bands indicate periods of high volatility, with the price frequently touching or crossing the lower band. The forecast for the next week projects a continuation of this downtrend, with prices ranging between $0.241 and $0.231. Considering these factors, I propose a short selling strategy focusing on the lower band of the Bollinger Bands and the RSI. My strategy involves shorting Vaulta when the price touches the lower Bollinger Band and the RSI is below 30. For example, if the price reaches $0.231 on November 13, 2025, and the RSI is below 30, enter a short position at $0.231. Set a stop-loss order at $0.246, just above the lower Bollinger Band, to limit potential losses if the price reverses. The target price is $0.22, a conservative estimate based on the forecast and support level. This strategy aims to capitalize on the predicted downtrend while managing risk with clearly defined stop-loss and target levels. Based on the historical data and forecast, Artificial Superintelligence Alliance is showing a strong downtrend. The RSI consistently remains below 35, indicating a prevailing bearish sentiment and oversold conditions. The forecast for the next week projects further decline, with prices potentially reaching as low as $0.169. The support level is consistently at $0.209, and the lower Bollinger Band consistently sits near this level, reinforcing its significance. Therefore, I recommend a short selling strategy. The entry price should be $0.237, coinciding with the recent resistance level. Place a stop-loss order at $0.263, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price should be $0.169, aligning with the lowest forecast price for the next week. To refine this strategy, we can incorporate the RSI. If the RSI rises above 30 and approaches 35, consider tightening the stop-loss to $0.25. If the RSI reaches 20, it signals an extremely oversold condition, and we should maintain the short position with the initial stop-loss of $0.263. The consistent support at $0.209 provides a further safety net. This combined strategy leverages both technical indicators and price action to maximize potential returns while managing risk effectively. The portfolio should be 60% short artificial superintelligence alliance and 40% in cash. Based on the historical data and forecast, Dash exhibits a strong upward trend, particularly evident from November 1, 2025, onwards. The price surged from $73.7 to $122 within a few weeks, indicating significant momentum. The RSI consistently remained above 50, frequently entering overbought territory above 70, confirming bullish sentiment. The Bollinger Bands also widened, suggesting increased volatility and potential for further price expansion. Given this context, I recommend a long position strategy. Specifically, enter a long position at $114 on November 13, 2025, with a stop-loss placed at $104 to manage risk. The target price should be $122, aiming to capitalize on the ongoing upward trend. To refine this strategy, we can incorporate RSI and Bollinger Band signals. When the RSI dips below 30, it signals an oversold condition, and when it exceeds 70, it indicates an overbought state. Considering the forecast price of $114 on November 13, 2025, and the RSI nearing overbought territory, we can adjust the strategy. If the RSI falls below 30, enter a long position at $102, set a stop-loss at $93.8, and target $114. If the price touches the lower band of the Bollinger Bands, enter a long position at $112, set a stop-loss at $108, and target $114. This hybrid approach combines trend following with momentum indicators to optimize returns while controlling risk. Based on the historical data and forecast, Near Protocol has shown a fluctuating trend with a recent downward movement. The RSI consistently dips below 40, indicating oversold conditions, particularly on November 6, 2025, at 36.8. The forecast predicts a continued decline, with prices hovering around $1.84 to $1.95. Considering this, I recommend a long position strategy. Entry price will be $1.84. The stop-loss should be placed slightly below the support level at $1.83 to mitigate potential losses. The initial target price will be $2.1, aligning with the recent resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, reinforcing the oversold signal. If the price bounces off the bottom Bollinger Band and the RSI starts to rise above 40, we can adjust the target price to $2.45, the upper Bollinger Band. This combined strategy leverages both RSI and Bollinger Bands to capture potential rebounds while managing risk. The portfolio will be 60% RSI strategy and 40% Bollinger Band strategy. Based on the historical data and forecast, Zcash demonstrates a strong upward trend. The price has consistently broken through resistance levels, and the forecast indicates continued growth. The RSI has been consistently above 50, reaching overbought levels, suggesting strong momentum. The Bollinger Bands have been expanding, confirming the volatility and upward trajectory. Considering these factors, a bullish strategy is warranted. Specifically, I recommend entering a long position at $498, coinciding with the first forecast price. A stop-loss should be placed at $478, just below the previous day's high, to protect against a potential pullback. The initial target price should be $585, aligning with the first forecast price and considering the upward trend. To refine this strategy, we can incorporate the RSI and Bollinger Bands. If the RSI dips below 30 during the forecast period, it signals an oversold condition, and we should consider adding to the position at that price. Conversely, if the price touches the upper Bollinger Band, it suggests a potential overbought condition, and we could consider taking partial profits. The final target price should be $607, the last forecast price, representing the maximum potential gain within the forecast window. This combined strategy leverages both trend analysis and technical indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, Internet Computer shows a strong uptrend, particularly evident in the recent surge from November 6, 2025, closing at $6.72. The RSI consistently moved above 50, reaching overbought levels above 80, indicating strong buying pressure. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price appreciation. Given the forecast prices consistently above $5, with a peak of $7.18 on November 13, 2025, I recommend a long position. Entry price should be $5, with a stop loss at $4.7 to protect against a potential pullback. The initial target price is $6.86, aligning with the forecast for November 12, 2025. If the price breaks above $6.86, a trailing stop loss can be implemented to capture further gains. To refine the strategy, we'll integrate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, consider entering a long position at the bottom of the Bollinger Bands, around $4.7. Conversely, when the RSI exceeds 70, indicating an overbought condition, consider taking profits near the top of the Bollinger Bands, around $5.84. The primary strategy is to buy at $5, set a stop loss at $4.7, and target $6.86. If the price reaches $6.86, move the stop loss to the previous day's low to secure profits and allow for further upside potential. This combined approach leverages both trend following and mean reversion techniques for optimized returns. Based on the historical data and forecast, Tezos has shown significant volatility. The RSI has been fluctuating, recently crossing the 50 mark, indicating a potential shift from oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. The support price of $0.565 acts as a critical floor. Considering these factors, I recommend a long position with a conservative approach. Entry price should be at $0.541. A stop loss should be placed just below the support level at $0.53 to limit potential losses. The initial target price is set at $0.599, aligning with the recent high and a reasonable profit target. To refine this strategy, we can incorporate RSI and Bollinger Band signals. If the RSI moves above 30 and starts to trend upwards, it confirms the upward momentum and suggests holding the position. If the price touches the lower Bollinger Band and then begins to move towards the center, it is another signal to hold. If the RSI reaches 80 or the price hits the upper Bollinger Band, it signals a potential reversal and a time to take profits. The second target price can be set at $0.633. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Filecoin shows significant volatility with periods of both upward and downward trends. The RSI fluctuates between oversold and overbought levels, suggesting potential opportunities for short-term gains. The Bollinger Bands indicate periods of high and low volatility, with prices frequently testing the upper and lower bands. Given the current RSI of 58.5, which is nearing the overbought level, and the forecast predicting a slight downward trend initially, I recommend a short position. Enter a short position at $1.5 with a stop loss at $1.54, just above the upper Bollinger Band. The initial target price should be $1.37, near the lower Bollinger Band and a previous support level. To refine the strategy, we'll incorporate a dynamic target based on the RSI. If the price reaches the initial target of $1.37 and the RSI falls below 30, indicating an oversold condition, consider moving the target price to $1.33. Conversely, if the price approaches the stop loss at $1.54 and the RSI crosses above 70, indicating an overbought condition, consider closing the position to secure profits. This adaptive approach, combining Bollinger Bands for volatility assessment and RSI for momentum confirmation, aims to maximize returns while mitigating risk in the volatile Filecoin market.